Hi, today we're going to talk about relationship between saving, investment, physical balance, and trade balance. So far what we have talked about, GDP can be computed from the expenditure method or income method. Expenditure is total amount of total market value of final goods and services produced within a period. So the major components of GDP are in expenditure method. Our consumption, investment made by the companies, government spendings done by the government. X represent export here and M represent import here. At high level, the total expenditure can be categorized or can be attributed either to consumption or investment or any government spending. If there's any leftover, we can attribute it to net export. However, in income approach, we said it's a total income earned by household or private organization within the time period for which we are computing GDP. So the total income, we can say, we can compartmentalize, or we can divide this income in major three factors. First one, income to support consumption spending. That's what C represents here. And most household, if they are not consuming, they will be saving it. So this saving represent the saving done by the household or other organization within economy. And also, if they are not saving and if they are not consuming, then they are, and any leftover, they must be paying taxes to government. So this T represent taxes. So our basic premises is the GDP should be equal between both expenditure and income method. So we can put this equation 1 and equation 2 inequality. So since left hand side should always be equal to right hand side, we can deduct consumption from, we can remove consumption from both sides, and we can kind of rearrange this equation where saving equal to I represent investment, and G minus T, which is G is a government spending, or minus T representing taxes. So we can say this is representing the net government spending, or a physical balance or physical surplus we're going to talk about in following sections. So this is representing that. So when we talk about it's a deficit physical surplus. So we're talking about government is doing more spending than the revenues it's earning in taxes. So we're going to talk about later in this in economics reading. And X represent export and M represent import. So this part of equation is uh, representing net export, or we can say it's a trade balance. So we can say as always, the saving will always be greater than investment, because you need to save first before investing it. So we can say difference between saving and investing, which is in this equation, is should be equal to, or should be financed by physical balance or trade balance, which is kind of makes sense. So any excess saving can be attributed to these two major factors. Or the other way to look into this equation, any government deficit budget uh, should be financed by or should be equal to the excess amount of saving within economy, or you can say the import which is made by the country minus the export, if we just rearrange between import and export. All right, thanks.